Okay guys, so this video is like super duper raw. I just got back from a baby appointment and I just wanted to quickly release a video for you guys because I noticed that the market kind of took a little bit of a nosedive towards the end of the day today. I want to share my perspective on what's going on and a couple observations that I think are going to be the trend for the rest of 2021. So if you appreciate this quick update video here, hit the like button down below, helps us out tremendously. I know the whole finance community right now is hurting because a lot of the views, a lot of the new investors that flooded the markets in the recent months have pretty much fled right now because there's tons of uncertainty out there. All of these highly speculative investments are down massively and they threw in the towel and pretty much called it quits for stocks. But I know if you're watching, you're in this game for the long term and we need to really analyze, see what's going on and take advantage of it because there are some big opportunities, guys, that I want to discuss today. So real quick also, if you are interested in discussing with myself or other members in the community, you can join our VIP group. We have a Discord in there where you can see all of my trades, all of my positions in my portfolio, and you can ask me any questions that you feel would be relevant to your investing career. So I'm just looking at my phone here with a bunch of my positions that I hold, and there's one thing that I really noticed when I was just kind of sitting at that appointment watching ticker symbols go up and down. The biggest thing is that there was kind of a divide in my portfolio today. There was about half my positions were red, the other half were green. And it wasn't like in the last few weeks where you had all of these recovery stocks or these opening of the economy type stocks booming today. It was kind of a mix, and I think this is just signaling to us where big money is actually starting to flood into. And as individual investors, we gotta really take notice of this and take advantage of it. So looking through some of my largest holdings, which you guys know about, Tesla was down about 4.5% today, Beyond Meat down around 6% today. FYI, I'm still up on Beyond Meat. I know a lot of you guys like to hate on me for that stock. I'm still up, and I'm still very bullish on it long term. Peloton was down around 4% today. And there's a few others like Uber down around 2% or so today. But now on the flip side, some of my more, stable companies did quite well today. So Starbucks was up quite a bit. Facebook was up quite a bit. Salesforce, one that I was buying recently, is up slightly for the day today, but it kind of held its ground. And there's a bunch of other stocks, even Splunk. Splunk managed to pull out a little bit of a gain here today. But the one common trend here, by just looking at my positions, is that big tech is starting to come back. What we saw in the beginning of 2020 was big tech, all stocks really started to rally after the market crash. But then as we got into summertime, around July, August timeframe, you had Facebook, Amazon, Apple, Microsoft, Google, hey, throw Nvidia in there too. You had these large tech companies kind of go sideways. They were just kind of moving along. They would go up a little bit, down a little bit, up a little bit. And if you just look at their charts, they were consolidating ever since that point. And this is typically what happens when stocks move up really far, really fast, which is what happened to big tech, because valuations had to start catching up now to justify those prices. Now, I believe some of these big tech stocks have had their valuations catch up, and now the stock price is starting to look cheap once again. This is a buying opportunity. My two favorite ones really are Facebook and Amazon. And I don't really like throwing out bold predictions out there for price targets and that kind of stuff, but I'll say this. When it comes to Facebook, I think that it's very difficult for me not to see this stock over $350 per share in the next year or two at most. In the same time period, I think that Amazon should actually be around $4,000 plus per share as well. These are the two big tech names that I really like right now. You're looking at Microsoft, it's not bad. It's an okay valuation, not really cheap in my opinion. I still think it'll probably be $300 plus in the next couple of years. Apple, this one is really a $2 trillion company now. I think it can still keep growing. However, Apple is expensive compared to its traditional metrics, so I think Apple may see a lot more consolidation and maybe even more downside while some of the other big techs pull the market up. And Google, I think Google's been doing pretty well recently. It's been holding up quite well. Nvidia, like I mentioned, I think this one's been beaten down quite a bit. It's actually at a decent value right now. I wouldn't say it's cheap. It's a decent value right now. And the point I'm really trying to get across is that during these times, you gotta really focus on quality businesses. I keep saying this in a lot of my recent videos because it's true, it's important. You have to focus on companies that have big moats, that are strong cash flow businesses, that are going to benefit in regardless of what economy we're in, you know, stay at home or recovery or whatever it is. These stocks are going to thrive. People are still going to keep ordering on Amazon. AWS is still going to keep growing. People are still going to keep buying iPhones. People are still going to be using social media like Instagram, Facebook. Virtual reality is going to be something that comes into play in the next couple of years as well. And Oculus is something Facebook owns. Google, people are obviously going to keep using YouTube. You guys are watching it on it right now. And then of course you have Microsoft. People are still going to keep using Microsoft's suite of products. These are companies that are going to do well regardless. These are kind of what I see as the new age safe stocks. Like, you know how back in the day you had Johnson & Johnson, Procter & Gamble, PepsiCo. Those were your typical safe stocks back then because they do well in any economic condition. I think these new big tech stocks are pretty much that for our generation. So if I was looking at the market right now and I'm like, I have some cash I want to deploy, where should I put it? What I would actually do is I would actually have some allocation towards big tech, again, specifically Amazon and Facebook. These are ones I really like. And then I would look to put some of that cash as well on beaten down tech plays that are good, solid, fundamental businesses. I'm talking companies like Splunk, Salesforce, Peloton. These are companies I really like. These are companies that have strong fundamentals. These are companies that are pretty much market leaders in their segment. And I think that, you know, because of the fears with the treasury yields and the fears with high growth and, you know, maybe another correction coming, all this stuff, these stocks have been beaten down more than they should have, and sooner or later money will start flooding back in and these stocks will start making new highs. Now here's the full disclosure. It could take a few months, possibly even a year, for these stocks to actually fully recover to where they were at, say, you know, a few months ago. But that's exactly when I personally like buying into these companies. I wait for opportunities where these stocks are kind of out of favor, and that's when I load up and build my positions. That's where I've built some of my most successful investments over time, like Neo, Tesla, Nvidia, even Apple. Those are stocks that I built into large positions when the media was negative on them, when investor sentiment was negative on them. Everyone was saying sell, sell, sell. You just look at the fundamentals and you're like, no, no, no. This is a buy, buy, buy. So I think a similar thing is happening right now with these high growth names, again, like Salesforce, Peloton, Splunk. You can name a bunch of these stocks. And I think if you have a higher risk tolerance and you're able to kind of weather a bit of volatility and you have a longer time frame, those stocks also do make sense to have some exposure in. What I won't do right now is chase some of these recovery stocks. I'm not going to chase casino type stocks or airline stocks or hotel stocks. Not going to chase those. The time to buy those stocks was last year. And if we didn't buy in, like, I didn't really want exposure to those spaces, so I didn't really buy in. It's okay, I'm just going to let it do its thing. I do have some industrial exposure, like 3M, for example. I think that's an easy $250 plus stock in a couple of years. So I'm playing kind of the recovery of the economy, global economy, through that. But anyways, guys, I felt that, you know, because of the fear starting to come up again in the market, that it was only right for me to make this quick update video for you. Again, I had nothing planned today. I didn't really plan to make a video because I didn't really know if I'd have time or not. But I know you guys appreciate this type of content, so here you go. Anyways, thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one.